Good morning, everyone. Good morning, ladies and gentlemen, and welcome to this live trading webinar. Today is Wednesday. We are in the middle of this trading week, and we definitely do expect it. The non-farm payroll event on Friday. How is everyone doing today, guys? Have you wake up? Is everyone ready to start analyzing the market? How is the mood? How is the trading mode going? Give me some heads up. How do you progress with your trading? Where do you find better understanding? Where do you find more struggles? Guys, please express yourself aloud here. Not aloud like myself, because unfortunately you cannot speak, but just make sure you type everything you want to know, some answers you want in your trading, maybe really without telling me where is your biggest strength, where is your biggest struggle. I won't be able to help you really. So please make sure wherever you feel that you want to share something, use the chat box below, and I will try to explain what really you need. Okay. Good morning, everyone. I see many people, they join us today, and this is fantastic. Guys, if you don't know yet about the trading podcast, please make sure you engage yourself with them, because every Monday I record them, I put them on the website. You can download them and you can listen to them. You can anticipate some news events, and you can combine some simple fundamental. Basically, I combine simple fundamental major news events with market analysis, and I just express them on the podcast, so you can listen to them and you can make trading decisions as well, because we combine these two, fundamentals and the technical analysis. So just very quickly, if you haven't downloaded your mobile application, because now you're not allowed to download the MT5 from the App Store and Google Play, so please make sure you use our native mobile app. And also the disclaimer to make sure that you understand this content is for general information only, and it's not intended to provide trading or investment advice or personal recommendations. Sorry, I read it so fast. It's something you can read as well. Good morning, guys. Good morning, everyone. Let's go to the Premium Analytics portal. Today, the event that traders, they're going to focus more, it's shooting the US Open, because we will have the ADP announcement. It's an indication of how the non-farm payroll event on Friday will be coming out, maybe, but in my experience, most of the times, if there is not a deviation between the forecast and the actual on the ADP, then non-farm payroll is just doing pretty much the same. So from the morning briefing, China's factory construction service activity contract further in November. Then China official softened tone on COVID curbside protest. RBC bets on immigration for $10 billion HSBC Canada deal. Twitter former trust and safety chief says he left when a system of governance went away. Rio Tinto plans $600 million investment in solar battery storage for Australians Bibara. And Twitter under Elon Musk abandons COVID-19 misinformation policy. They put it up on their website as well, as you can read from here. And let's go to the charts. I struggle to know when markets are ranging or trending. Billy, thank you so much for your feedback. I'll make sure that I will mention something in this webinar, but also just quickly, guys, let me share with you something very valuable. You go to Admirals YouTube channel, and if you haven't subscribed, yes, please make sure you do so. But I would like you to go to the trading spotlight here, and I've done some webinars about how to read trends, and that will help you. Also, this trading psychologist webinar that will help you a lot, how to think in probabilities. But there are spotlight trading. I thought I wouldn't need to open it, but anyway, so if you scroll down, I do some trend analysis, how to read price action, trading Bollinger Bands, currency correlations for beginners. I've done this webinar, and it's good to use it. How to use support and resistance, and I talked about how to understand trading and ranging markets. Okay, so everything is here on the trading spotlight. Please make the effort to learn a few things from that. Okay, so what do we see on the dollar index, the leading indicator? Yesterday we said that this double bottom from this 200 moving average with this bullish engulfing line can push prices to the upside in favor of the dollar. Yesterday we saw just a little bit trading volume within this candle here. Let me zoom in so you can see it better. So what do we expect to keep seeing today? If we're not going to see more push to the upside, definitely, if this is not going to follow through, definitely we can see some push to the downside. But the forecast is that something that keeps an object that it's in motion, it's going to keep in motion unless an opposite force it to change direction. So for now, in the very short term, you see we have higher highs on the daily chart. So for 3 days, if you go down to the 15-minute, 1 hour, 4 hour chart, you're going to see that we have this uptrending market. And what's the expectation? To keep seeing a strong dollar at least until Friday. Today is not the non-farm payroll event. It's on Friday, the non-farm payroll event. Today, it's the ADP event. That's a forecast of the non-farm, the NFP. So today we have that forecast ADP event announcement. So the dollar looks to keep up with strength. Let's have a look at the DAX 40. Yesterday we stopped at this trend line. Trend lines can act as support. The market is just doing this move to the upside. So this is a clearly trending market, because we see that each high, it's higher than the previous high, and each low, it's higher than the previous low. So this is in an uptrending market. Okay, so what do we do in uptrending markets? We want to be buyers. We want to find areas of support to use them for buying activities. If we go down to the 4-hour chart, what do we see here? We see that the market is respecting this trend line, at least for now. That's the accurate points, this low, and then we are around here. Usually after this impulse move, usually we do see some deep correction, to be honest. So maybe we're going to have some break of this trend line, and we will expect then the market to come and retest this level of inside support. I call it inside because it comes from the inside of the previous candle. This support here, we call it a strong support because we don't call it outside support, but that's a stronger support because it hasn't been violated by any price move so far. Okay, just a few things for you to learn as well. So what do we do today? In my opinion, we keep buying based on what I see here from the charts. We have some type of bullish piercing pattern here for those who like candlestick patterns, and we can see some more to the upside. FTSE 100, we are approaching, we broke above this level of resistance yesterday. So today we are on a free ride, let's say. We can definitely retest this area of resistance because that's where the market wants to go based on this price action. And if we go down on the 4-hour chart or the 1-hour chart, we can find now, because it's very it's in that impulse move. If we go down to the 5-minute chart, we can find some retracement like this one. It's happening now. Some retracement, we can, let's say, buy somewhere. If we have a trend line, if we have if we draw our FIP and we have this 50%, 61.8%, wherever we would like to buy it, let's say, and then target a bit higher because there is room, clear room to move to the upside. So we'll see what it's going to happen with this one here. That's for very short-term trading, okay? Dow Jones, after we retest this strong area of resistance, we do nothing because we didn't see a break above. If we were broken above this area, we will keep trading to the upside and target this level. Now, in my experience, smart money, they're gonna determine what's gonna happen with this market. If we're gonna see some follow through from here, or if we're gonna see some deep retracement, who knows? The fact that we came right at this resistance indicates that either selling pressure is present and we're gonna see free fall to the downside, or we're going to have some retracement and we're going to try to identify some trading patterns like ascending triangle, for example, or some just minor retracement, minor correction, and not a deep correction. Guys, if you see the price is just doing like this and you see these strong, long red candles in the chart, it means sellers, they came in force, right? It's like which occasion? Like this occasion here, for example, you see after this impulse move to the upside, the sellers, they don't have long fulfilled red color candles or any other bearish color used on your chart. So from this point here, we can understand that selling pressure is not in existence. So what can we do? We can try to find some buying opportunities. And here it was the bullish engulfing for those who are trading candlestick patterns alone. So this could help us understand that we are not in a reversal, we are in a retracement. All right, because again, many people, they struggle to identify the difference between retracements and reversal. How can we identify that? We can see the chart patterns, candlestick bodies, and after a few candles where the market is hitting to. Okay, so we don't have any bias, strong bias for this market. Nasdaq and the S&P, they are both on this phase. We are right at this support on the Nasdaq. On the S&P, we are holding a bit higher from this previous support. So it looks like Nasdaq is more weak. It's weaker than the S&P 500. What can be determined from here is where the US dollar is going to hit. Okay, now, if you want to trade solely the Nasdaq 100, you better find a strong candlestick pattern on the 4-hour chart or on the daily chart on the 4-hour chart. For the S&P 500, pretty much the same. If you want to trade it to the upside, let's say this is the 4-hour chart. We have this 4-hour chart trend line, downwards trend line. So if we break and close above this trend line, then it will be a good indication that the market is heading to the upside. Okay, but unless we close above and have a strong price action reversal, then it's not worth to start doing it because the other indices are not clearly showing bullish momentum. All right. Then, guys, any pairs you would like to see today or something you are trading and you want to see the analysis? Beside the analysis we do here, we start with the pound against the dollar. We said that all the time when the market touches the 200 moving average, if it doesn't break instantly, then definitely we're going to see some reaction. This reaction is coming to the downside, not in that strong force, to be honest, but it's still a downward movement. Now, what can we do here right now? It doesn't have any clear indication of where the market is hitting. If we go to the weekly chart, we can see that we had this trend line here. We broke above the trend line, so we expect the market to come and retest this area of resistance. But really, when we approach the 200 moving average, we have to understand that even temporarily, the market can push to the downside. So we have to wait for that. Let's see if there is something. Plus, the dollar index, it shows clear dominance, at least based on its price action and its position. Bounce of the 200 moving average. So with this market here, if the dollar is going to push to the upside, then definitely the pound is going to push to the downside, again, the pound against the dollar. Yesterday, I had a pending order here on the euro against the US dollar to the downside to take the advantages of possible move strength of the dollar because of the dollar index. That's what I do with currency correlation, actually, because we trade the one currency against the other, so we have to understand the correlation. If the dollar is strong, then and the euro is strong, then definitely we're not going to go to trade the euro dollar. It's not like individual stocks. Okay, we said it so many times, and I will appreciate if you tell me if you understand currency correlation. If you don't understand it, it will be good, so I know how to help you with this one. So we are around this resistance on the euro against the dollar, and on the dollar index, we are around that support. We do expect to see some push to the downside, maybe, but this one here, if it's going to happen, based on the market structure we have right now, that we broke above the trend line, we can see some, we need to see some lower highs and lower lows, let's say on the 4-hour chart. if we're going to go for a very tight stops. But if we're going to do swing trading, then if we're going to sell our stop, it's going to be higher than the high of this bearish engulfing bearish long upper shadow, whatever you call it. It just shows rejection, right? So, but understand that in short term, we are not in a downtrend. So for short term, we are in this uptrend ranging. So we have to treat it accordingly. USD is very against the CHF. It's very messy here. So we are hovering around the support. Aussie against the US dollar. Let me take this up. Aussie against the dollar. Yesterday we were trading strong higher than this previous candle. Now we just stop around, but it looks like buyers are very keen to push the Aussie to the upside. From this point here, we can identify the trading pattern. We can identify this. If I connect this high to that high, and then this low to this low, what do we see here? We see a symmetrical triangle. I have a webinar on that trading spotlight about the pattern. So if you are new here, or if you haven't watched it, yes, please make sure you do it. It's going to help you a lot. Trading patterns, that's what technical analysis is trading pretty much. That's what price action reacts to. So if we identify the trading patterns, we can have a statistical edge in our trading. So what can we see here in a very short term? We see that this move to the upside, followed by this symmetrical triangle. If the triangle we break to the upside here, then we can measure the distance between this high and this low, the base, and we can replicate this distance from here, and we're going to be well in this area. That's the area we would like to trade. Okay, so this pattern here can, in my opinion, if we're going to break above, it can play out really, really well. Kiwi, the same against the dollar. This looks more for bullish rather than for bearish. The weekly chart here, a trend line on the weekly chart, it's not there anymore from this area. Then another one, it's far away from the current price. So as we said many times, this long-term trend line, down trend line broken. So we are trying to find some bullishness in the market here. Okay, but why don't we do it on the pound now and on the euro? It's because the market structure on the pound and on the euro doesn't give us any clue that we can trade now these pairs, but it's more clear on the Aussie and on the Kiwi. Do you guys understand this? USD CAD, we put a few days or few weeks ago, we put this trend line here, touch this high, touch this lower high. So we have this move here. Around this trend line, we can experience some weakness on the dollar. Okay, trend line, downward trend lines, they act as resistance on downward moves. So here we have this move. Some people, they just initiate positions if in 2-3 candles, if the price it's not breaking above the trend line, they just initiate positions to the downside. Okay, so the good thing I like about this this move here, it's because if we draw the fib from high to low to see the retracement, we stopped exactly at 61.8%. Plus, for traders, they find it hard to identify its support and resistance level. I will suggest you to use the line charts, and you're going to see where the line bends. The line charts represents only the closing prices. So the recent support, it was here where I just marked it. Do you guys see it? Here it was the recent support, and it matches nicely with the 61.8% fib retracement. So it's a strong level of confluence for trading, and we can use it to initiate some trades from here. Okay. USD JPY, 2 days ago, I was saying that when we're going to break below this low points and close below, I would like to just sell it all the way down, but we haven't closed it yet. So I'm still waiting. From experience, I can see that this can be developed as a descending triangle pattern, because we have now double bottom here, we have this high here. So if the price is going to come a little bit to the upside, then we can see some nice pattern following through. Aussie against the yen, it's very messy here. So Billy, if you're here, how do I identify the trending market and a ranging market? If you're going to zoom about 6 months, we are, to be honest, we are trading in 4-hour charts, in daily charts, sometimes on the 5-minute charts, whatever. So the big picture of the market, it's usually about 6 months of data. So you can zoom out 6 months, 1 year, whatever, and you can just see the picture. What do you see here? If you see that prices moving upwards with the time, then we are in an uptrend, just basic. If you see that prices moving downwards, we are in a downtrend. So if I change it to this picture, the pound, what do you see as big picture here? Do you see prices moving in a direction? And if yes, then which is the direction on the daily, on the pound USD? It looks like it moves to the downside, right? But if you go to the Aussie against the Japanese yen, you can see that this market is just moving sideways. So that's the first way to understand how to identify the trending from a non-trending market. Then we use trend lines and moving averages to identify some more structure. Okay, but first we need to see the big picture, like this one here. Let's have a look at the gold. Of course, if the US dollar is going to get weakened, the gold is going to push to the upside because it's traded against the US dollar. We talked about this bullish engulfing candle previously last week, and we said that about 50% of the bullish engulfing, it's the way I like to trade them. Okay, and here we said we had these higher highs, then we push back. We see very long candles here breaking this resistance, so we pull back here around this area of support. For me, it's a good buying opportunity anyway, so I'm just waiting to see what the market is going to do. Crude oil, as I told you, I'm still holding this this trade here because we had this double bottom. I like the double bottoms or the double tops to show that it's a couple of months old, not like this one here, double bottom. I don't like to trade this kind of double bottoms because they are, let's say, a week or a couple of weeks old, and in a downtrend, it's not that strong. For me, this double bottom, it's just a pause in and correction in the market. Okay, but when I see this double bottom here, yeah, then definitely I'm all in to take some trades to the upside. Okay, so we had some rejection here, then another rejection there. So we see how this is going to play. And gold, we talk about gold, pound against the Australian dollar. Let's find the pound against the Aussie. I'm pretty sure I have it somewhere here, pound against the Aussie. So what do you see here, pound against the Aussie? Do you see a trending market or do you see a ranging market? In the long term, we can see ranging market, right? We are here. If we squeeze, in this range of data, we can see this resistance here. We can see this support. So that's a very short term, but we are trading within this range. Now, if you took this this candlestick here, that's a double inside rejection here. So if you enter there, you have 177, you are almost 1-to-1 or more than 1-to-1, sorry. Just be mindful if you are trading the pound, this is trendless, okay? But if you are trading the pound on the 1-hour chart, definitely you're going to see downtrend here. You're going to see uptrend there. It depends on your time frame, but for a big picture analysis, this one here, it's in trendless environment. And now we're just bouncing between this support and this resistance, these boundaries. It's not a high probability trade, okay? Let's face this fact. Anything can happen, absolutely. What do we want to see? We want to see just markets like the gold, they have structure, or in a trendless environment to have clear support and clear resistance, or in a trending market to have these higher highs and higher lows to trade. Okay. Thumbs up for Theo, please. Thank you so much. All right, guys, I hope you find again a lot of value from this webinar. You understand how to trade. There are few intraday opportunities. I saw inverse head and shoulder on the 4-hour, on the crude oil 4-hour. Yep, definitely inverse head and shoulder, well spot on, Cherry. So that's the head. If we're going to push to the upside, then definitely we're going to see this amplitude, this height too. We can replicate this one, and we can have a target of a head and shoulder pattern. We have it on the webinar as well. You can, for those who don't know, you can watch the webinar on that subject. All right, everyone, I would like to wish you a happy trading day and happy rest of the day wherever you are. Zebs, we talked about USD JPY. You can see it on the recording. Sorry that I don't have more time in this webinar to go through. So have a great time, ladies and gentlemen. Look forward to seeing you tomorrow at the same time. Thank you so much. Bye for now.